What are some high growth stocks that I'm potentially looking to buy, but definitely watching for the month of September 2020? Well, that's what I'm going to reveal right now for you guys. And as a bonus, all three of these stocks are down 50% or more from their highs, so it's going to be a fun video here. So guys, if you enjoyed this series on the channel, smash that like button down below, subscribe as well if you're new to the channel, and if you want to see a glimpse of what stocks I personally hold in my personal portfolio, check out the VIP group, link in the description down below. Now here's a company you may have never heard of before unless you were in the market recently for a car. The stock is down over 57% from its highs, so it did catch my attention when I was looking for some high growth names. CarGurus is a global online automotive marketplace that helps connect buyers and sellers together for new and used cars. So yes, this is a global company and they operate in the US, China, and the UK. What makes CarGurus unique is that they claim to use proprietary technology, search algorithms, and data analytics to bring trust and transparency to the automotive search experience and help shoppers find great deals from top-rated dealers. It's no secret that the car buying experience, apart from probably Tesla, has been fairly poor and, historically has not been the best for consumers. There's always a lot of lack of transparency. A lot of times you're left kind of feeling like you got ripped off, and it's just not a pleasant experience for such a large purchase. So CarGurus really wants to solve that problem here. The company has 42 million global average monthly unique visitors, and they brought in nearly 600 million in revenue in 2019, and they have 30,000 global paying dealers for their platform. Now, when looking into their business, the first thing I noticed was their management team has been around the block. A couple of them have come over from TripAdvisor, and you have a pretty diverse team here from different industries in their past lives, so they have experience working in larger companies. Adding to their uniqueness here, CarGurus has the largest US auto inventory with over 5.5 million listings, so it's more or less the go-to place to search for your next car. The big problem that they're addressing here with the car buying experience is the financing and negotiation process, which consumers are not thrilled about, amongst other things. So they plan to simplify this process as well and make things overall just more transparent for the consumer, which should improve overall experience and most likely would result in repeat buyers and someone who would refer, the service to friends and family as well. So if you do a search for, say, a BMW 328i, there's a few ways to list it, but using their data analytics, their system is smart enough to recognize similar models and group it together to provide useful information like this, which will help in making a final decision on a purchase and if you're getting a good deal or not on that car. Now, there's a lot more to this business. They actually have quite a few different things going on. So if you do find any interest in what I've talked about so far, I highly encourage you to check out their website and just read through their different offerings to really understand what the value of this business is and where they plan to go in the future. Now, here's what you could expect for growth in the business. So while 2020 isn't looking so great, they're expected to be back on track in 2021 with over 20% growth, qualifying it for this video and making it a very interesting high growth stock for September. We can see the steady revenue growth here as well, and this business is also profitable today, so that's a nice bonus. The company also has a very attractive price sales ratio as well, with the current market cap of around 2.692 billion and 2021 revenue expected of 637.5 million. Price to sales sits at around a 4.2, which is reasonable for a high growth name. So I just wanted to throw this company out here for this video here in September because this stock has not really been discussed at all on YouTube as far as I'm aware. So hopefully this gives you a new idea and kind of a fresh perspective on a pretty hot industry right now, which is cars in general. And maybe there is some upside potential here with this stock. Now, this may be another business you haven't looked into or heard of before because it tends to fly under the radar. This is another name down 50% from its all-time high, so another big discount name here if things work out over the long term. This is a very interesting business. They believe that everyone should have the opportunity to create progress through technology and develop the skills of tomorrow. They have assessments, learning paths, and courses authored by industry experts on their platform, and this helps businesses and individuals benchmark expertise across roles, speed up release cycles, and build reliable, secure products. They have a large base here, over 1,500 authors or teachers, and they have customers with 70% of them being from Fortune 500 companies, but but they're still a growing business at 1,700 employees today, so the potential for them to keep expanding and growing is great. Now here are some businesses that they've helped, and I'm sure you'll recognize most, if not all of these names here. So, they have some pretty good relationships going with large companies out there. Now you may be wondering, what does growth look like for this company? And in 2020, they're expecting slightly over 20% growth, and next year they're expecting around a 16.6% growth. But with the shift happening right now in the world and the demand for more remote and online based skills, I would not be surprised to see next year come in at or around 20% growth as well. The downside though is, despite their revenue growth and everything here growing nicely, they are still not a profitable business, but their losses did shrink year over year, so we'll have to wait and see if this year or next year can eke out a profit. That being said, at today's market cap of 2.59 billion and 2021 expected revenue of 450 million, it puts them at a price to sales of 5.75, which is in the realm of reasonable, but I would like to see this get into the 4s if possible to provide us even more value, and I think that's where it would probably be a very strong buy. Now, if the broader market continues selling off like it has the last few days, it's quite possible that this company comes down quite significantly and gives us that price sales ratio that we're looking for. Now, I know this was a very high level look at PluralSight, but if you want a more in-depth video, if this is a company that does interest you, or if any of the companies I talked about today do, let me know in the comment section down below, and I can try to look to make a dedicated video on that if there's enough interest. And guys, if the content on here does appeal to you, don't forget to subscribe to join the community. That's absolutely free. But if you do want to support the channel as well, you can hit that join button and become a member of the channel. Anyways, moving on, let's move on to our third stock here, which is again down over 50%. Lyft is the worst of the bunch on this list here, down 60% from its highs, which also happens to be the price that it IPO'd at. Now, this has been a stock, along with Uber, that has faced a lot of issues in the last year, and the global issue made things orders of magnitude worse for these companies. But does this mean that Lyft is going away? I don't think so, and I think it's actually a pretty high candidate for a complete takeover from a business like Google. Now, I've covered Lyft at length before, so I won't bore you with the details, but just know that Lyft is huge in North America, which is their core market, and they have been growing nicely. But now check this out. In 2020, their revenues are expected to decline by 31%, but the next year we expect a strong rebound in growth to 47% year over year. So there's a lot of upside if you are a believer in this industry recovering within the next few years. Personally, I'm a Uber bull, made a lot of videos on this as well to kind of back that up. So my money sits with them. But that being said, it's hard to argue the value that Lyft is showing us today because it's essentially out of favor currently, and as a result, has seen a lot of selling. Now, the concern, and has been the concern for quite a while with both Lyft and Uber, is the amount of money that these companies burn. Lyft here shows us a nice revenue growth, but then look at those net losses. It's almost as much as a revenue that they brought in, and that is concerning. Over time, this should get better as they focus more on profits versus growth, but for the foreseeable future and to remain competitive with Uber, these losses may actually continue for quite a while as they keep pouring money into the business. Now remember, Google is a big investor and believer in Lyft, and it's quite possible that they buy them out at some point and combine it with their Waymo technology to compete with Uber and the self-driving technology that Uber has, and possibly even to compete with Tesla and their robo-taxi that they plan to release. Now, this may or may not happen, it's all speculation, but Google's already shown interest in Lyft here, and it's quite possible, in my opinion, that Google considers just buying out Lyft directly and making it part of Google, making it a Google company, because it would fit in quite well with their Waymo business and what they plan to do with that. And you know what? To me, it just makes sense, so we'll have to wait and see if that does happen. That being said, I wouldn't base an investment on that solely. As of today, Lyft is a $8.871 billion company, but we just saw that they lose billions of dollars a year. So that is definitely something to consider if you're looking at an investment here. But anyways, if you calculate the price to sales ratio here with a revenue 2021 of around $3.67 billion, it puts a price to sales of 2.42 for Lyft. And this is extremely low because the market is pricing in risk in this business, and because of that, we're getting a stock that's quite heavily discounted and is a very tempting buy, and probably is the quote-unquote most undervalued or cheapest stock in this video. But anyways, CarGurus, PluralSight, Lyft, rank them in the comment section down below from your most favorite to your least favorite so we can stir up a discussion down there. But anyways guys, I hope you enjoyed this video, hope you found value in it. Remember, smash that like button down below if you did. Thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one.